We got a big week this week when it comes to gross domestic product. And what happened last week with Canada CPI? Let's talk about it here at Capital Markets. Traders, what's up, guys? Welcome back to Capital Markets. It's your host, Cleveland Bishop. Hope you guys are having a rock star start off to the week. I want to go over some of the fundamental data, and I want to give you guys a quick technical look of what we're looking at this week. So make sure you guys stay subscribed so you get the videos subsequently after this one. We're going to be pushing them out all week long. And if you guys ever have any questions, make sure you comment down below. I'll be right there to answer them, right? So last week ended off with Canada CPI. Canada CPI was forecasted at 0.4. We ended up getting 0.1. That's a massive deviation on the other side of positive data, right? So Canada, definitely one of the more hawkish central banks in the entire G7, is looking to raise rates, but we're currently functioning right now at less than a 7% likelihood that that rate rise is going to happen. With that CPI coming out so negative, that's going to be affecting a very large amount of the decision making that is going to be coming in from the central bankers over in Canada. They want to go hawkish. It's definitely been the most hawkish central bank over the past 2.5 years. But what's that data going to do for them? They actually rose rates too fast. Last year they rose 3 times, and each one of those times were incrementally larger than expected. And that pushed Canada back a bit because a lot of the global economy thought that Canada raised too fast, and they priced a lot of the Canadian strength out of the market that they thought was going to be coming on in. So what Canada is going to look like right now, Canada has been the weakest performing currency out of all the G7. Here's a quick screenshot of the June month of Canada. Again, we haven't seen a sell side move on any one of these other currency pairs as large as Canada this year alone. So when we do get the GDP data that comes out this week for Canada, that's going to be big. That's going to be big implications on whether or not growth is here in the Canadian economy. Remember, we were getting a lot of growth factors involving the U.S. economy that were positive, but we weren't getting inflation behind it. And now we're finally getting that inflation. So maybe the same thing will happen here for the Canadian dollar. Maybe we'll get a better than forecasted GDP, which will hopefully start to lead to some positive inflation data coming in for the Canadian dollar. That is something we're going to be keeping an eye out for. But don't worry about it. Look, Canada's data doesn't come out for the next few days. We'll be talking on the day before that rate rise happens, so make sure you guys stick around. When it comes to the US dollar also has a GDP data release that'll be coming out this week as well. Obviously, US GDP has been trekking higher and higher and higher. Here's a quick screenshot of the Euro USD. You guys can notice here, markets are at the low of the $1.15 flat, and it's been hard pressed for markets to trade lower than that price point. There is a massive amount of consolidation to the left of a previous low that was formed in Q4 2017, and markets again having a hard time breaking past that psychological level, $1.15. We think that we might see markets trade back up into the structure, especially if there's any kind of weakness coming in from the dollar or any kind of strength coming in from that euro currency side. Euro last week, guys, you got to remember, mentioned they may not be raising interest rates, but they are going to stop the quantitative easing policy. So any settling of the risk that are currently in the European market would definitely lift that market back up into structure. Europe has not performed so well this year, so there is some upside potential in case some of that risk gets priced out. Right now, Trump, for example, is thinking about a 20% tariff on German car imports, and that's a lot of cars. Audi, BMW, right? Mercedes. These are massive manufacturers here with headquarters in the United States, and import tariffs on those vehicles will definitely affect the global market as a whole. So you might see a little risk start to be priced in regards to that, but that leads us over usually to the JPY. We'll talk about that a little bit later on this week, how when markets get a little bit risky, that JPY currency tends to get stronger, and it's actually the strongest moving pair this morning. Here's a quick screenshot of that. So far, we're looking ahead this week in markets. We have consumer confidence for the US dollar coming in early. And then remember, we have that GDP release coming out a little bit later on. Canada has the GDP release coming out later this week on Friday, but they also have the CPI numbers that came out horribly negative this past Friday, right? And then outside of that, we do have an ECB meeting that will be happening later on this week as well. What you guys need to be focusing on right now is this consumer confidence number. That's going to be dropping on Tuesday. Take everything one step at a time. I don't want to overload you guys. If you guys keep posted to the channel and stay subscribed, you'll get all the different data releases as they come out. Make sure you guys comment below if you have any questions. And also, folks, Capital Markets, we're one of the top brokers in the entire industry. We route from some of the best liquidity providers, and we also have some of the tightest spreads, which means you're going to be paying less and less per trade. That's good for day traders and even the swing traders, right? So make sure you guys head over to capital-markets.com to get your account started today. All right, I'm Cleveland Bishop. Talk to you guys tomorrow.